All the greatest gains in life, in wealth, relationships, or knowledge, come from the magic of compounding interest, amplifying small, steady gains. All you need for abundance is to keep adding 1% more than you subtract on a regular basis. Kevin Kelly. My friends, every day we add to our knowledge base. We want you to grow in abundance and wealth. We want you to add, if it's just 1% more than you subtract on a daily basis to your knowledge, to your ability. And of course, once you start mastering this and you start real money trading, can't tell you how long that will take. Anybody out there promising to make you a market master in a super short time, a few simple months, is lying to you and taking your money. Here we concentrate on trend following, on accurate thinking, on reality. We are not about falsehoods. We are not about getting rich quick. Of course, the goal is getting rich, but slow, steady gains over time. Those are the folks we want, people who are dedicated 10 to 15 minutes a day for as long as it takes, because look at it this way. Once you dedicate yourself, you're going to be doing this for the rest of your life, and you will be getting better and better and better. Here at almost 60 years old, I can tell you that whether it's my physical fitness, it's my fitness when it comes to investing, to trading, to my law practice, whatever it is, every day I plan to get incrementally better each and every day. If you will do that, you will find that your dreams will come true. You can't do this in spurts. It's got to be done on a daily basis, just like your physical fitness. That's probably the best example I can give you. You can't train all day Sunday and expect to get in good shape. It is a little bit every day, a little bit every day. It will grow, it will grow, it will grow. You can do this. I'm your biggest fan and your biggest supporter. Let's jump into these charts. We see stocks are mixed today. The S&P 500 up, the Nasdaq 100 down. We see that 20-year bonds down a little bit, gold up a lot, Bitcoin up some. Let's jump first into the S&P 500 up 0.22% starting off the week with a green up candle. That's good to see. Price percent oscillator flat, derivative oscillator heading up. We can see where price, however, and we can adjust this a little bit as far as moving it further up in time, trying to connect, if we can, 3 candles. Close to it. Anyway, what we see happening is price is above the weekly trend line. That price percent oscillator is flattening out. Let's look at the 2-day. You can see it's still positive, but heading down. Now, when we look at the trend line, it's continued to move up. That we can see, though, where things aren't peaking out higher. Now, this is just the first day of the latest 2-day candle. We'll see what happens on Tuesday. Derivative oscillator continuing to lose momentum. If you do have a rotation over, of course, this 2-day crosses over tomorrow. That would take you out if you were still in this trade. And it's done fine for us so far. But again, you set your profit and loss bands at the beginning of a trade. You can change those profit bands around as the trade moves on. But just be careful. Don't lose what you have gained. We see that on the half-day chart, that price percent oscillator just refuses to rotate over, going up. Derivative oscillator gaining some downward momentum up in the morning, losing a little bit in the afternoon. Still up for the day, 0.22%. That's where we are on the S&P. Let's go to the Nasdaq 100. As seen on QQQ, we see that we're starting the week off with a red open box, almost a doji, spinning top. And we can see that as the week starts off, the price percent oscillator is trying to pull through and go down. So pay close attention to that, down 0.53% for the day. Derivative oscillator still positive. 2-day, check it out. We have a red down candle forming, blown through the 2-day trend line, and the weekly as the week starts. Red down candle, wick on the bottom, solid red. If you see this 2-day crossover, of course, that would pull you out of the trade. We see the price percent oscillator on the half-day chart. What do we have here? We've got 2.5 days of pretty strong down movement, particularly at the end of the day on the Qs. Like we said, down 0.53% for the day, price percent oscillator heading down, derivative oscillator gaining downward momentum. That's where we are on stocks. Look at bonds. Bonds also weakening. We can see the week starting off weekly. We have a red, almost again a doji. We see the price percent oscillator still going up, derivative oscillator going up, but they've blown through any semblance at a trend line on both the weekly and the 2-day. We look at the 2-day, same thing. We can see where it blew through, heading down back on Thursday and Friday of last week. Got a green spinning top again, just down a little bit, 0.09% for the day, but no big gains, no big up movement, derivative oscillator. And again, price percent oscillator still positive on the 2-day. Derivative oscillator is too, losing momentum. And on the half-day chart, we can see where things had pounded down and then started trying to move up for a day and a half in the morning and then blowing off that steam on Monday afternoon after moving up Monday morning. Price percent oscillator still negative, derivative oscillator negative. So lots of weakness in bonds, and we're seeing weakness on the Qs, so we'll pay close attention to that. Where's the good news? Good news, my friends, is gold. Gold up for the day 1.30%. We had that weekly vertical crossover in gold back on the week ending the 23rd. Those of you who had some questions this last week where gold was weakening on you, made up for them on Monday, didn't it? Price percent oscillator pulling away from the red signal line, derivative oscillator slamming up, 2-day chart. Starting off with a bang, the first day of this latest 2-day candle heading up, touching that 50-period moving average line. Quite nice to see, well above the weekly trend line, but still below the old 2-day trend line. That price percent oscillator is going up. Derivative oscillator still positive, losing some momentum. And for those of you looking at a potential jumping in point, of course, look at how difficult this is to see. You can see where the weekly vertical crossover occurred, and then gold trudged down and then shockingly popped back up. Why? Because all things being equal, the market tends to move in the direction of the largest chart. Sometimes you don't know when that pop is going to take place. Those of you who didn't get into gold earlier on that weekly vertical crossover, pay attention, see what you get if gold crosses over, say in the morning. When that morning candle has drawn, why don't you check out as the half day hits after 195 minutes? If it crosses over going up strong in the morning, why don't you do a practice trade on gold and see how that works out for you using this half day as a trigger? Might be something for you to practice and just see what you learn from that. It doesn't cost a darn thing to practice trade, except you need to fill out a trade worksheet, follow it, treat it like it's real, and learn from it. Gold may plunge in the morning, may not give you that opportunity, but pay attention. We'll see how it goes. That's where we are on our big four. Lastly, let's take a look at Bitcoin, up 3.25% for the day, starting the week off with a green up candle. That's good to see. Bitcoin, of course, over the last 2 weeks, trundling down. Price percent oscillator still moving down. Derivative oscillator heading down. 2-day chart flattening on the price percent oscillator. Derivative oscillator losing some downward momentum. First day of the latest 2-day candle popping up. That's good to see. What do we want to see in Bitcoin? We want to see Bitcoin cross over and head up on that 2-day price percent oscillator and pull that weekly over and give you a good jumping in point. What happened on intraday? We can see for the last 2 days, nice strong up movement in Bitcoin. So we'll continue to watch, wait and see what Bitcoin's going to do on that 2-day, on the week and the weekly. Still weakness there. 1 day doesn't mean a total change in things, but it's nice to see the week starting off with a green candle. That's where we are as we end the day on Monday. We so appreciate you guys being with us. We're always here for you. We have books available. If you want to supercharge your training, figure out what we're all about, the quickest, best way to do that, is to buy our book, Charting Your Way to Wealth. We have an autographed copy waiting for you. Follow the link in your show notes. If you're not a subscriber, go to chartingwealth.com, sign up for free. Every day, you'll get the special trainings that we put out. We've got a special training we put out today for you. It is entitled The Magic of the Weekly Vertical Crossover. That is our main indicator that we look for, weekly vertical crossovers. When they occur, we know there is a sea change in the attitude in that particular stock, that particular ETF. We look for those. You want to know what those are about? They're in your training today. If you don't get that training, sign up for free at chartingwealth.com. That list is never spammed, never shared. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.